So what the hell is happening with the market right on this last months?
Yeah, I mean, it took me by surprise. My base case was that we were going to see the typical year-end rally. Obviously, most of us had the same idea. Usually when most of us have the same idea, it doesn't work. But the other thing I did know is, having come from that finance background, knowing how hedge funds and institutions work, I also knew that if you're a hedge fund and you've got crypto in your portfolio, you've probably had a good year. So to get paid, you tend to close out your portfolio. So you know what you're going to get paid at the end of the year. So they are incentivized to sell their positions, to go away for Christmas, have a break, that kind of stuff. The institutions like pension funds and others, they tend to rebalance their portfolio. So like Ethereum's up 500% this year. So if they started with a 1% weighting, they're now at a 5% weighting. So they probably bring it back down to, let's say, a 2% weighting in line with their allocation. So you've got institutional sellers that never really were in the market before. And they're not expressing, I don't think, a negative view of the market. What they're just doing is rebalancing for year end. And so my general view is that most of that selling is now done. And so the next thing they all come into January with is a new P&L. And, oh, what do I do now? The only answer is I have to. Yeah, I'm just going to look at my Bloomberg screen to see what the volatility of Amazon is. And that'll give us an idea of what a large adopted network, which is an exponential or logarithmic trend. Bitcoin is roughly about 75% volatility. So it's a very volatile asset. Over time, volatility falls as more people are in the network because you don't have discrepancies between buyers and sellers that create illiquidity because there's more people in the network. So you'll tend to find, Amazon now is trading off call it a 30% volatility. So it's half that of Bitcoin. So I think, as Bitcoin or cryptocurrencies get to 1 billion users plus, what we'll find is that the volatility will fall, the prices become less exponential in nature, both to the upside and the downside. But it should remain in a logarithmic trend.
In how many years do you think this market will be less volatile, the crypto market?
Like 1 billion people, when we reach 1 billion people, it's due to the growth.
Well, 1 billion people, bizarrely, because of the compounding numbers, if it's growing 113% a year, you get there by 2024. Just use the adoption curve. Assume it slows a bit, because adoption always slows because the rate of change goes down when more people are in it, right? So it's easier to go from 1 person to 2 people, that's 100% growth, than from 2 to 4. Just extrapolating the numbers, you get to 1 billion people by 2024. And that's by slowing the rate of growth down to 80%. And so you're at 3 billion, 3.5 billion by 2030. Well, and also look at the holders of crypto. They're not the traditional holders of equities.
Yeah.
So here's a bunch of old people wagging their fingers saying, well, it's much more volatile. The younger people who own crypto like the volatility because the volatility gives returns, risk reward. Well, the equity market gives less of that. So it's a whole change in risk appetite for the population.